Alright guys, welcome back to another episode here on the Dividend Doggo channel. This is the weekly update and review of the portfolio here on M1 Finance, and we're going to be talking about a couple cool milestones. The first one being $22,000 in dividends collected into this portfolio and then sent right back into stocks. So that is money that I did not really have to work for to get, and have that just reinvest right into the portfolio to make more money. And that is the beauty of compounding and setting up a dividend portfolio and letting it work for you. Now, the other thing that's pretty amazing, and I've crossed this threshold a couple times, but I don't like screen capturing something just to talk about it. If it's not actually at that point when I make a video, I don't like screen capture during the week. So this is the end of week, and you can see the all-time gain is up $110,000 and a little bit of change. But that for me is a milestone. I've seen it cross this 110 point a couple times in the past 2 weeks, but the volatility in the market shakes things up. Sometimes it's been knocked down when I wanted to go film, and I just don't go back and take screen captures of it. But as you can see, the portfolio was doing really good. It's doing its thing, and we have some stocks in the red this week, some stocks in the green. But overall, this week's ending point, we earned $1,107 in dividends. That's going to come in near the end of the month this month. I believe that's Mo. I think it's Mo coming in. That stock has just been on fire lately. We'll take a look at it here in just a moment. But ending up the week, this week it was up, it was down. If I look at the 1 day, almost all of the gains were on Friday, on April 9th. It was all over the place as far as this week goes. It was red, it was green, it just barely teeter-tottering. You can see it was a very up and just kind of flowing week. I do want to talk about the one buy that I had before I go look at a couple of these stocks that I believe are paying dividends the end of this month. I want to talk about the one buy that I threw some money at on April 9th, which was Friday. Beginning of market, I threw in another $1,000 to acquire 3.15258 shares, yay fractions, of Home Depot. Home Depot has really taken off, and if you watched it over the past year, it's one of those stocks that you just, if you had thrown money at it last year, you just made money. And the housing markets, regardless of what the Fed is doing right now, they're not going to change anything for the next 2 to 3 years. We're still going to have relatively low interest rates, maybe not the lowest we've ever had. We might be at the peak for that, or the low point. But overall, people are still going to be building houses. They're going to be doing upgrades on those houses. A lot of people are still going to be afraid of traveling over the next year, so any extra money that they have is going to go into housing repairs. If you've looked at new construction, you would know that the prices of things are just insane. If you can even get them, some window installers are having to charge an arm and a leg. You're delayed several weeks on getting custom windows in. Lumber prices are just gone to the moon like Dogecoin. It's just absolutely incredible, and it's kind of insane. I think I like Home Depot over Lowe's because of their new internet integrations, the new platform that they've been working on. I love the credit card system that they've got. There are perks with Home Depot that I really like. However, Lowe's is right there with Home Depot. So if you're a Lowe's fan, I'm not downing on you. I'm just going to build up this position first, and I might actually start a position in Lowe's soon. It's done phenomenal. Both of these stocks are just quality. They're just amazing. So let's go in and take a look at Home Depot here. So this is the 1 week, but let's look at 1 month. This is my value going up because I'm throwing a lot of money into it. But looking at the gains, this is a pretty substantial amount of gains, considering I didn't have a whole lot in this position. This is just this month. This position was at $3,700, and I've put in quite a bit. But to have gained, this much in such a short time frame, and most of this is on the actual gains portion for the stock. That's just wild. It's climbing, and the PE ratio is getting high. The dividend yield is obviously getting lower, but they've traditionally had a relatively low dividend yield, but they're relatively consistent about giving the raises out. When they're making money, you're going to make money as a shareholder for Home Depot. So that's pretty much what I wanted to talk about with Home Depot. I'm just loving it. Mo crossed over for the first time. Now, I've not really added to my Mo position in quite some time, but it is just staggering. Looking at the 1 month, this is up $4,400 in gains alone, and pays out that hefty dividend on top of that. This is mind-boggling to me that this stock is taking off more. And whether you're against or for Sin stocks, this is a position I have conviction on, primarily because they are semi-diversified. They're not fully diversified, but they do own positions in Bud, which is Budweiser, Anheuser-Busch. That's beer. It's got a really solid future if more and more legalization does occur as far as the marijuana market goes. I'm not really against any of those things. I've personally seen the benefits and the medical health care that can be provided to someone, and the relaxation of the symptoms for cancer patients, things like that. I'm all for it. This stock has been incredible. It is at a slightly lower yield than it was last year. By slightly lower, it's like almost 2% lower. But it's still just growing. And a lot of people told me that this is a dying stock. This is just absolutely crazy. But here we are, 52-week highs, rushing it up at 60K with, I've only put in, I believe, about 39,600. I'm pretty sure, or no, sorry, my cost basis on this is for 46,000 total. So that means I'm up between dividends and the market gains. I'm up about 16,000 on this. That's not right. I haven't earned the other dividend to come back in, but I am going to drip the dividend this round. It comes in the end of this month. I'm going to go ahead and pick up some more shares of Altria. I wasn't doing it before, but it is just because I thought the position was super big when I had it set up, but it's growing, and I think there's a good chance that it keeps going up. I do want to talk about a couple of my outliers here. I do still like Pepsi quite a bit. I think that you get a good diverse package if you're buying Pepsi versus Coke. I do still love Coke quite a bit. However, I am going to be getting this Home Depot position up to about 12,000 over the next 2 to 3 weeks. That's the goal. And then after that, I'm going to pull up Costco a little bit, probably get that to somewhere between 5 and 7,000. And I'm going to pull Target up to about 10K. Target has just been one of my top performing stocks over the past year and a half. They're getting better and better. I see their targeted ads because my wife has the red card, which is their internal credit card system where they give you 5% back, similar to the Amazon card. Target is slightly expensive. However, there is not a Walmart anywhere near where I live. You pretty much have to go to Target if you want the mid-tier shopping experience. There's one in the mall, and then they just opened one off of Santa Monica Boulevard, which is kind of interesting. But Target is another one of those that I kind of wish I had put more into right away. As we can see, VST still in the red all time, but it fluctuated quite a bit this last week, but it ended up just barely being negative this week. It was positive last week, so I'm curious to see how that comes in. But you can see the dividend payments are rolling in with the stock. A few quarters, and this is just going to be phenomenal. I think this is going to bounce back real quick here and be a very green position going forward in the future. But if I look at the 1 month on everything else, all the utilities across the board have been doing really good. Whether you're in Dominion, whether you're in Duke, NEE, Southern Company, PLL, PPL, all of those are doing relatively solid. Um, the industrials is one that I wanted to talk about because CIX has been on an absolute tear for the past month. $5,794 up. The dividend came in. I bought some more shares of this. I'm not sure I can justify the stock in the 20s, but it is still just doing absolutely phenomenal. Again, this is one that if you're going to buy the stock, you should make sure you're doing it in small batches, especially if you're using M1 and market buys versus limits. I think I've talked about that before, but I wanted to mention it again anytime I look at this stock. This is not a stock that you want to bulk throw a whole bunch of cash into at once, just because of the fact that there aren't a lot of shares that are traded every day. So it runs up in price really quickly. It is, I'm going to keep that around as a long-term play for quite some time. So everything else looking really good when I look at the 1 month. When I look at the 1 week, the only thing down here in industrials was just slightly with Caterpillar. Caterpillar is a stock that I've had a lot of conviction on because of construction. It's just not going anywhere. I think it pays a solid dividend, and it's a quality company. It's easy to sleep at night with holding it. Looking at the green here in Telecom, a lot of you know that I sold off my Verizon position. 1 week, the market gain was low. However, we had the dividend rolling. That's kind of counterbalancing that. I am going to reinvest my dividend in T when it rolls in. The dividend yield is phenomenal on T right now. They're not going to be doing heavy raises with it. I'm hoping that they can pay down debt, but I do see the stock going back up into the 30s soon and staying in the mid-low 30s for quite a while. There's a lot of reasons for that, but I think they've actually been relatively successful with HBO Max in this. I don't want to call this the second year because it's still really the first year, but it feels like it's had a long time to kind of shift and grow. And I can tell you without a doubt, we've had Peacock for 1 month, and that service is the worst of all of the streaming services I have experienced so far. So if I had to pick a few winners, it would definitely be HBO Max, Netflix. I hold Netflix via a 401k portfolio, and I just, it's phenomenal. Like, they nailed the service, and they keep it consistent. So going into energy, I just wanted to briefly look at energy. It was down pretty consistently across the board, except for EPD. EPD is basically pipeline transition, moving around oil and services. It's one that I bought into, and I had, obviously, as you can see, pretty big conviction on this. This is a high dividend stock. However, the stock does give you the dreaded K forms when you're looking at those. It's additional tax forms that you'll have to file with an accountant if you have one. It is complications when you get into the MLP space. However, it has performed phenomenally well for me. As far as gains, dividends, when I first bought into this, I believe it was a little over 9% dividend yield. So you make money where you want to make money, and the K form was really not as big a deal as a lot of people made it out to be. I did work with a CPA on it. The worst part about K forms for me was the fact that they didn't come in until like the first week of March. Like, it was ridiculous how long it took to get the K form in. So yeah, that's pretty much a pretty solid overview of the portfolio for the week. I will go back so you can look at that one last time. it was, industrials being carrying through the portfolio and keeping it in the green this week. I'm just going to continue to buy shares of Home Depot. You can see I've moved over some cash into the balance here. I'm going to continue to chunk into Home Depot and build that up, and then I'm going to start looking at other positions from there. So that was the weekly update. I hope that all of you appreciate seeing the goals. We've grown phenomenally over this past month, more than doubled the subscribers to the channel, and I appreciate each and every single one of you. Those people who drop me comments and likes, I really do appreciate that. It means a lot to keep me inspired after getting through the work week to continue to film and give you guys these updates and see what the next big investment is. Now, I will say that the gains from this portfolio are climbing rapidly. However, I do have another portfolio that I've been tempted to show y'all. It's it's basically one stock, and it makes up over 50% of the entire taxable portfolio that my wife and I have. And if you know what it is, drop me a comment below. If we get enough likes, let's say 15 likes over the weekend, I'll consider doing a video on that and try to figure out how I will film capturing that so that y'all can see exactly what the gains are and what buying and holding long term is on that stock. If you want to see that video, drop a like, a comment, and let me know. If you know what it is, a lot of you from the JC Joseph Carlson show community on Discord, you know what it is. As always, Harris Heller bringing us home with the stream beats. I love that guy. I love the jams in the background. I work with them all the time, listening to them in the background every week. Thank you very much for watching. This is Dividend Doggo signing out.